Welcome to Oil and Gas Investor Headlines for the week ending in March 18th. I'm Heather Rosenbaum. Before we get started, I want to take a moment to thank our sponsor, Navport. For more information on their upstream data solutions, visit navport.com. First up, the U.S. will continue to be the only major producing country with an Atlantic coastline that is not able to explore for oil and gas off its Atlantic shores. The oil and gas industry's quest to open the Atlantic basin to seismic gathering and offshore drilling was squashed by the Obama administration, despite support from 4 coastal state governors and a petition with 180,000 signatures that was delivered to the Interior Department. The proposed program for the Outer Continental Shelf Oil and Gas Leasing Program for 2017 through 2022 would have offered acreage to at least 50 miles offshore Virginia, North Carolina, South Carolina, and Georgia. Turning now to A&D news. Energon Corp released more details about its plan to divest an estimated $400 million in assets. This comes after a $380 million equity raise. The company plans to leave the San Juan Basin entirely and make it a pure-play Permian operator. The company's president and CEO said it's also looking at acreage divestitures in the Delaware Basin. And despite predictions of a ramp-up in M&A activity, deal-making in 2016 is turning out to be sluggish so far. We heard from U.S. Head of A&D Advisory for Macquarie Capital, Grant Butkus, at the Doug Rockies Conference this month in Denver, Colorado. Butkus says there's 3 key factors behind the continued slowed A&D market: high debt levels, continuing wide bid-ask spread, and ongoing commodity volatility. For additional reports from speakers and for more stories this week, head on over to oilandgasinvestor.com. Thanks for watching this week's Oil and Gas Investor Headlines. See you next week. To stay up to date on the most recent hard energy videos, subscribe to our YouTube channel by clicking here.